Good morning, and today is Tuesday, February the 14th. The time right now in Singapore is 11:27 in the morning, and today is the Western World Valentine's Day. And for those out there who are celebrating, I'm wishing you also a happy Valentine's Day. And overnight on Wall Street, the market has basically rebounded off the low that we saw on Monday. So the market actually started on a weak note, but gradually it started to rise, basically in expectation of a good CPI report tonight, which is going to be released at 9:30 p.m. Singapore time. Market expectation is for the CPI to drop from the previous month of 6.5% to 5.8%. So basically, it is looking for a good number. If the number come in better than expected or at 5.8, the market is likely to rally. But if the market came in hot at above 6%, then maybe the market was going to come back down again. So the market has been rising in expectation of a good number. So be very careful chasing this market higher, because although the possibility of a extended rise into tonight's trading is very high, but again, look out for, if you are a medium-term or long-term trader, do take this advantage to look for a selling opportunity. But for those who are trading short-term, I think the odds for an extended rally going into the opening hours of the New York session is pretty high. Okay. Now, over in the S&P 500, we are seeing the same thing. The market has rebounded off Friday's low. So far, we have seen a low traded to as low as 4,060.8. This is based on the S&P 500. Previously, I mentioned this decline from the high of 4,195.4 is a three-wave affair, meaning to say that it is corrective in nature, and if it's corrective, then the higher time frame is going to exert its pressure, and this uptrend here remains very much intact. I've always maintained that this uprise here doesn't look complete. For the market to be complete, it needs to at least, proportionally speaking, symmetrically speaking, it needs to rise to 4,373.5 thereabout to actually look symmetrical. But so far, I think there is the expectation that the market wants to rise, so we will maybe have to prepare for this move. But for medium to long term trader, like I mentioned, the odds of a long term decline is pretty high. But in the meantime, short term trades seems to suggest that the upside potential is basically still very much intact. Okay, over in the Nasdaq 100, we are also seeing similar rebound. Same thing like what we saw in the S&P 500. The market rebound off Friday's low of 12,204, and this is a three-wave pullback from a high of 12,881. And again, but unlike the S&P 500, this market three-wave rebound from the last October low looks to be symmetrically balanced, and the high of 12,881 does look like it may be the top for this round. Okay, but again, we will have to see what the other indices are doing, especially if the other indices has not hit their optimal height, then maybe it may also influence the Nasdaq 100. Okay, but by and large, I believe the Nasdaq 100 may already top up at 12,881 that we saw 2 weeks ago. Okay, over in Asia, let's take a look at Asia activity. Over in the Nikkei 225, you can see that Nikkei actually opened on a positive note, but as the hours progressive in the first half of the session today, market seems to be pulling back, and the high traded so far was actually on Monday. Market actually not this Monday, but the Monday before this was 27,821, and the market seems to have difficulty maintaining above this high. There were 3 attempts to actually go back above 27,821. One happens on Tuesday, did not quite make it, and then another happened on Friday. Again, it was sold back down. So today, maybe as the market progresses, we still have a second half. We want to see whether the market have enough momentum to actually challenge this. Okay, even if the market can take out 27,821, there is 2 other barriers in which it must cross convincingly to be able to tell us that this rebound from the last September low is still very much in play. If you're looking for symmetrical relationship, this move here does looks incomplete, and if it is the case, the possibility of a move higher assuming this is what the market wants to do, let's do this. We do one equality. Okay, if the market wants to go up equality, the market may have to re-challenge the 28,500 levels again. So this level here is 28,542 to 28,910. Okay, so thereabout, I think the market will challenge this high one more time to make it look symmetrical, balance, and from there, I think the odds of a sell-off does increase proportionally. Okay, over in the Shanghai Composite Index, again we are seeing prices wanted to rally, and if we are looking for symmetrical relationship, we can see that this three-wave rebound will probably peaks out somewhere at 3,372 to 3,415. So this bracket of prices is going to be quite interesting to see what the market will do. Okay, over in the Hong Kong market, we have seen the Hong Kong market actually pulling back 1, 2, 3. So right now there is a five-way structure. So a five structure means it could be anything like a more sizable correction. So if this is the case, then market may pull back either at the 50% or the 61.8%, and then maybe it will come down from there. Okay, so if this is the case, I think somewhere, hang on. Somewhere in this bracket of price, okay, so wrong price is this price. Okay, somewhere between 21,750 to 21,775. Okay, it's also quite near to the underbelly of this support and resistance. So anyway, I think this market is primed to trade to the downside. So if you get a chance to trade on the downside based on a reversal signal, take it, because I will. All right, guys, let's move on to the currencies. Over in the currency, you can see last night there was a bit of a pullback in the dollar. We have seen dollar recovering for quite some time now, and the high in euro versus the dollar is at 110.33, and that was traded on February the 2nd. The market has gone all the way down to 106.55, which was what traded on Monday, and now we can see the market is rebounding in early Asian trading hours. So the first barrier to higher prices will be 108. Okay, 108 is going to be the one big barrier for the market to cross. If you can cross above it, well and good. If it's not, then I think it will come back down again. So the dollar strength story remains very much valid, and we are seeing that very much reflective in all the other major currency pair. Over in sterling, we are also seeing the market tops out somewhere even earlier than the euro dollars. The market tops out in January 23rd at 124.48 or thereabout. Okay, and the market pulls back all the way to 119.60, and now we are seeing a rebound. So this rebound, if it unfolds in the three-wave corrective pattern, may see sterling short-term attempting 122.65 to 122.90 levels, and if the market comes to this level and couldn't sustain and start to show us a reversal signal, take it, because I will too. Okay, over in the Aussie dollars, the rebound that we are seeing from the low of 0.6855, which was traded on February 26, 2 Mondays ago, you can see the market is likely to unfold in a three-wave as well. So again, the target somewhere will be 0.745 to 0.765 thereabout. So the market can go back up to into this bracket of prices. There's a good reversal signal. Okay, that will be another signal to tell us that the dollar strength may come rolling back. Okay, just be very careful shorting the dollar at its current moment in time. Over in dollar versus the yen, you can see the dollar yen seems to be wanting to recover. The low 127.21 was actually traded on January 16, so the high here pulls back, and now we are seeing another rally attempt from here. Okay, so if we are looking for symmetry, okay, the market should be able to go up to 135.50 to 136.20. So this is what we call equality move, and this is just the least optimistic outlook. If the market is managed to surge beyond 136.20, then the market is in a totally different frame of mind altogether. Dollar versus Canadian is struggling. It has been sidelining for quite some time. The low is at 132.60 and the high is 134.70. So the market has been trading within these two extreme boundaries here, and assuming the low last night at what you call it, 133.25 is the low, then there is the possibility market may actually target 135.39 to 135.66. Okay, but still the market will be in consolidation. Now let's move forward and see what is happening in the precious metals. Gold market continue to linger lower. There is simply no incentive or no motivation to buy a precious metal at current levels. Overnight, we can see gold traded to as low as 1,850. This is a far cry from where it was just 2 weeks ago at 1,960 levels. Okay, so the market has dropped something like 1,000 uh, 100 $110 over this last 3 weeks, and it does look like it may actually continue to drift lower. I think the area of interest to me will be 1,824, okay, and a half, because previously we can see this is a pivot line. The market was capped here at 128, 1,823, and then come back down and supported at 1,825. So somewhere between these two bracket of prices, I will say I'll take a medium price of 1,824 and a half. I think we should be able to see some kind of support return, some kind of demand returning from these levels. So if you are looking to buy, maybe that will be a great level to look out for. Okay, over in silver, currently silver is a little bit weaker than gold. Okay, at the rate the market is coming off, and you can see that from a high of $24.64, market is now trading at $21.80 thereabout, and is likely to continue to drift lower. Target is somewhere between $20.60. Okay, this is the nearest target going back all the way to November 21st. Okay, so the nearest area of demand is at $20.60. Over in crude oil, we can see crude oil managed to edge higher to a high of $80.62. Now, compared to 2 Mondays ago, the market opening on a weak note went out to $72.25 and reversed. At a point where the market hit $72.25, you can see this reversal sign here. This is based on a 4 hours time frame, and this reversal sign is what we call a hammer, and prices have not looked back since. Okay, so high traded is $80.62 on the back of the news that Russia is trying to cut back its production, also putting a cap on the discount rate that they are giving to friendly nation that buys Russian energy products. So by and large, this is a bullish news. The market is basically going up based on that. Okay, over in crypto, we have seen the correlation between crypto and equity markets. Okay, marching in lockstep. So if the equity markets is able to recover tonight based on the CPI number, then I think that will have a positive influence over crypto prices, and thereabout I think the market may actually take higher. Based on the Bitcoin itself, the high traded of $24.258, and the low traded this morning at $21.376 seems to have come to a point whereby I think the market is getting ready for a move to the upside, at least to test. Okay, market has taken out the previous bottom here at $22,314. So maybe this will be the short-term resistance level. So we have to see how market reacts if it goes up. Okay, over in Ethereum, we are seeing the same kind of movement. Ethereum had basically been falling from 1,714 all the way to 1,463 and 20 cents. It does not look like he has found a bottom yet, because although he has taken out the most recent bottom here at 1,500. Okay, so the market still has a little bit downside left before it can stabilize. I believe the support is lying somewhere around $1,361. But if the market managed to clear above this short-term resistance point, right now it has not. It has tested but couldn't cross over. But if it does, then that may leave the possibility of a more robust recovery. Until that happens, we were just going to watch this thing. Okay, over in let's see what else. Over in Cardano. Cardano also hit a bottom this morning at 0.345. The low here was 0.347. So the market did a test of the low, couldn't find any follow through selling. Market reversed. This is a reversal signal based on a 4 hours time frame. So this should actually work out well for short-term bullishness. So if you're looking to scalp this market, there's a possibility the market may actually starting to go up. So if you want to do this, go down to the lower time frame. I suggest you can look at maybe perhaps a 1 hour time frame and take your cue from there. So what I would normally do if I want to go and scalp this thing is to basically look for levels to enter a trade. Okay, so what I'll do, I'll move this a little bit to the left. I want to see, take a measurement. The 50% mark seems to lie somewhere. I have to expand this. I can see the number here. Can't see the number very clear. Okay, I have to squeeze it a little bit so to get the number correct. Okay, the level is 0.353. Okay, 0.353 to 0.354. In the market ever come to this bracket of prices between 0.353 to 0.351, look for any kind of buy signal to emerge. Ideally, you see something like what we saw at the bottom of this move here, something like this. This is a hammer, and this will be encouraging for us to take a trade on the long side, at least for a short-term trade, to see if the market can actually go up and challenge this high here, which is 0.74. 0.374. Okay, so if you want to do this trade, put a stop below 0.345 and to gun for 0.374. Now this is a short-term play. I will not do it myself because I don't do short-term very much these days. It's simply too taxing for an old man like me. Okay, anyway, this is all I have for you. Now remember, tonight at 9:30 there will be CPI released. Keep your eyes peeled for this number because it is going to be volatile. Bye bye, take care, and I shall see you tomorrow.